Hello traders, today we want to discuss how to count Elliott waves one step at a time. How to count Elliott waves one step at a time. Alright, so what I'm going to do, we're going to analyze Baidu Incorporated, Epic BIDU, Bravo India Delta Uniform. This is a Chinese company that specializes in the web services. It provides also search engine services for website in China. We can call Baidu the Google of China, all right, or the Yahoo of China. But our main topic today is how one can learn, to count Elliott wave one step at a time. All right, this is the best approach. All right, because very often traders will count Elliott wave. All right, rushing to count wave. All right, doing all sort of things. All right, all you need to do is to stay calm like a professional trader and do it one step at a time. All right, so after you count your wave, you're going to go to the next step, verifications. All right, very important. Validation of your wave count. All right, very important. All right, and paying attention to the market cycle itself. Okay, one step at a time. So talking about one step at a time, you want to start it with the easiest way you can. Which time frame can you easily recognize the waves? All right, so you start with the easiest one and then go one step at a time. If it becomes a bit complex, you want to break it down. Very simple strategy. All right, break it down. All right, and then you go one step at a time. All right, verifying every step along the way. This is the mindset that we want to communicate to traders, so you may improve your Elliott wave count. So let's get started. So I'm on the yearly chart because it's quite easy for me to see the waves on the yearly chart. So here we are. So looking at this chart with the information that I have today, my friend. This is the language you want to adopt. All right, with the information that I have today. This one here, those two candles, this is the first Elliott wave, the second Elliott wave. Now, talking about Elliott wave count one step at a time, let's see whether the second wave has canceled the first wave. It did not. All right, you can see that the low of the first wave is somewhere here, and the retracement of the second wave did not cancel it. So one step at a time. Good. Let's move on. All right, so next step, where is the third Elliott wave on this time frame? Is quite easy. We may say all the way up here. All right, it looks like it has been extended. Yes or no? It has been extended, obviously. All right, it's more than 3 times the length of the first wave, so it has been extended. Definitely. All right, so now where is the fourth wave? Looking at these charts, maybe this one. One step at a time. Is the fourth wave overlapping the first wave? No, it's not overlapping the high of the first wave. Good, so everything looks good so far. All right, one step at a time. Let's move on. So what is the fifth Elliott wave? The fifth Elliott wave is this one here. We will see. So on this yearly chart, this is what I see. So it looks to me that I have first wave, second wave, third wave, fourth wave, and the fifth wave. All right. Is the third Elliott wave the shortest wave? No. All right, it's not. Maybe equality between the first and the fifth one. We will see. It's not. Good. So no violation of Elliott wave principle. All right. No violation of, So if you want to forecast the fourth Elliott wave, so we want to see whether everything is working beautifully. Let's connect the high of the first wave and the high of the third Elliott wave. Here it is. By doing that, what we are trying to do is to use Elliott wave channeling, all right, to see whether a professional trader were using. We want to find out whether those who are trading this Baidu stock, a heavyweight, technology stock, we're using Elliott wave channeling to forecast, okay, the end of the fourth Elliott wave. So we will connect the high of the first wave and the high of the third Elliott wave. Then we will select what? The low of the second wave, drawing a line that is parallel to the first line. So you can see that it's not easy to see the low of the second wave on the yearly chart. So with what I have here, I can only draw a line like this. So I have a channel like this. Looks to me that after they have drawn that channel on the yearly chart, those smart professional Elliott wave practitioners, probably they were combining the Elliott wave analysis with market geometry by projecting that channel on the yearly chart in the direction of the price as the price breaks below it. Looks like it, you see? It looks like it. It looks like it. Yeah, so this is the end of the fourth wave. It looks like they were connecting it, okay? So on the yearly chart, remember, on the yearly chart, that's all I see, that's all I can say. All right, so one step at a time, but now I don't want to stop on the yearly chart. Let's go to the monthly chart to investigate whether this is truly the first wave, truly the second wave, or so on and so on. Let's see on the monthly chart if everything is adding up as it appears on the yearly chart. Okay, my friend? Okay, let's go to the monthly chart, okay? One step at a time, okay? So now we're on the monthly chart. Let's see what's going on here. Okay, now, without too much blah, 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 we call this one the first wave on the, this is the second wave. So one thing you need to be careful is that when you're looking at the corrective wave, see whether it has the structure of a corrective wave. See this one, 1, 2, 3. Am I talking to myself? Let's go into that session. 1, 2, 3. It looks like a correction. Good. All right. One step at a time. Let's see the fourth Elliott wave. Can we zoom into it? Here it is. Again, 1, 2, 3. All right. It's a correction. So looks like it. This one looks like an impulse wave, and this one also looks like an impulse wave on the monthly chart. So it looks like we are doing very well so far. And now, hold on, please, my friend. We want to check the structure of this so-called the fifth Elliott wave. Looks like a three-wave, yes or no? On the monthly chart, it looks like three-wave, yes or no? You think went up, pull back, went up. You will say, oh, this is not an impulse wave, because it shouldn't be 1, 2, 3 if it's an impulse wave. The impulse waves can be subdivided into 5 minor waves. So what's going on here? All right. Well, there's something else more which I talked about last time. Be aware of the tails of some of the candles. You see this move here? This is another wave. A lot of traders may not see it. You see here, this one here? There is a wave here, but if you are just looking at it and you think 1, 2, 3, but it's not 1, 2, 3, it's 1, 2, 3, 4, 5. All right, and we will get there soon, because we're going to drop down again one step at a time to the weekly chart, and we will investigate what I'm saying here on the monthly chart, whether it makes sense also on the weekly chart. So here we are. So personally, this is the first minor wave of the fifth wave. All right. All right, it's the second minor wave of the fifth wave, and this is the third minor wave of the fifth wave. We'll investigate that on the weekly chart, one step at a time. And it's the fourth minor wave or the fifth wave. I'm going to call out that fourth minor wave because a lot of traders may disagree and say, George, is all mumbo jumbo. You need to go back to the classroom and learn more about your Elliott wave trading. All right, okay. I forgive you. Okay, so now we will investigate this one and see whether on the weekly chart and see whether it's truly, okay, if there is a wave here or not, okay? All right, so far so good. First wave, second wave, third wave, fourth wave, and this is the fifth wave subdivided into 5 waves. Now again, we want to go one step at a time. The third Elliott wave should not, the third minor wave of the fifth wave should not be the shortest impulse wave. So at least it's longer than the fifth mana wave. Therefore, it's not the shortest impulse wave. Good. Excellent. Nice. All right. Is the fourth wave, this fourth mana wave or the fifth wave overlapping the high of the first wave? No. Very good. So no violation of the Elliott wave principle. Now let's go to the weekly chart. What I'm going to do, I'm going to put two vertical lines. Okay, try to do that also. Okay, to investigate on the weekly chart whether there is a wave in that section or not. I'm going to make it a little bit wider so when we change to the weekly chart, we can all zoom into it with our eagle eyes to see whether there is a wave or not. Okay, let's go to the weekly chart. All right, oh, where are we? Okay, move it back. Here we are. Can you see between the two vertical lines? What? Can you see down? In fact, it's again 1, 2, 3. Can you see? Okay, let's zoom into it. Let's zoom into it. Let's zoom into it. Let's zoom into it. Can you see it? Okay, here it is. 1. Can you see? All right. All right. If you're not sure, ask your children. They will tell you. Yes, it did went up there. It did go down. Here it is. 1, 2, 3. There's a wave there. So you see now, but if we change, okay, pay attention to the vertical line. If I told you there's a wave here, so 1, 2, 3, 4, 5. Okay, all right. Even this one has been subdivided into 5. Okay, the first wave has been subdivided into 5. Now we zoom into it. First wave, first mana wave of the first wave, second mana wave of the first wave, third mana wave of the first wave, and a bit messy because it almost come to the top of the second wave. But if I adjust my line, you see that here it is. You can see there. All right, you can see we are talking about the high of the second wave, almost touchy. This one got a tail. We talked about it last time. All right, and then this is the fifth mana wave of the first wave. 1, 2, 3, 4, 5. All right. Okay. You may argue and say that okay, this is almost equality between the fifth and the third in your wave, so it's not the shortest wave. Okay. All right. So now let's go back to the. You see what I'm talking about? All right. So one step at a time on the monthly chart, it looks like we have 1, 2, 3. Okay, waves. We have like we were thinking that the fifth wave is formed of 3 waves. But now that we went to the weekly chart to investigate, it was clear that it's an impulse wave that was subdivided into 5 waves. But when I was talking about it on the monthly chart, I believe a lot of traders may think that George, we are not very sure, George. We love you, but we are not very sure about this one. All right, we want to see it, okay, and verify it before we can trust that. You see here? All right, you see, it looks like just a tail, and you may think that it's 1, 2, 3, you see. But as we went to the weekly chart to investigate, you can see clearly now that we have an impulse wave that has been subdivided into 5 mana waves. You see, one step at a time. So, as I told you, we have finished to count our wave. So talking about how to count Elliott wave one step at a time, we're going to proceed now with other verifications to see whether everything is aligning beautifully. You can also remember that on a yearly chart, I start drawing my Elliott wave channel to see whether traders that were trading this Baidu Incorporated, okay, stock, were using the Elliott wave channeling. That will give me more confidence if I see that, okay, by applying the Elliott wave channeling, yes, it's making sense. It looks to me that those who were trading this stock were applying the Elliott wave channeling. This will give me more confidence to verify that this is truly the 4th wave or this is truly the 5th wave, because we can forecast the end of the 4th wave and the 5th wave using the Elliott wave channeling. All right. So now on the monthly chart, we're going to do exactly the same thing we have done on the yearly chart, because now we are zooming into it like an eagle. All right. So here we are. So we're going to connect. Okay, I'm going to move this line to the side a bit so I can pinpoint the high of the first wave and the high of the third Elliott wave right here. Okay, so I'm going to use Elliott wave channeling, connecting the high. This time on the monthly chart, we have done it. Connecting the high of the first wave and the high of the third Elliott wave. Boom. Now I'm going to color it down into red. Here we are. And our next step to verify whether the fourth wave has ended exactly on the edge of that channel, we will draw another line through the low of the second wave. You remember on the yearly chart was not quite easy, but here it is a little bit easier to do that. Okay, so I'm going to place without cheating, of course. Here we are, we have the same, you see now, we have the same scenario, you see here. Are they parallel? Okay, we'll verify that soon. Something like that, okay? Is it parallel? Well, tell me in the comment section, all right? We want you to talk to us in the comment section, please. So here we are, so is it making sense? All right. Okay, here we are. So, but you can see, as I was telling you on the yearly chart, professionals were also using market geometry. For new trader, it can be a bit challenging to be a multi-talented trader. So, very often traders switch off. Don't switch off, okay? Don't switch off. All right. You see it from, so, you know, you look at it, all right? Don't just stare at it, okay? Look at it from different angles. All right, different angles. Okay, start doing that. Try to train yourself to see things from turn it around. All right, turn it upside down. Turn it. You may discover something that no one else has found before. Okay. Here it is. So they were using market geometry. It's clear to me they were using market geometry as they draw the first channel. The first channel was quite close. They will be saying, all right, if it come out of it, so you see here, 1, 2, minimum price move is free. So they're expecting the third one, boom, down on the edge of, all right, the projection of that channel, market geometry. Here it is. By the way, if you do not know anything about market geometry, you need to go to you need to subscribe to Day Pro Traders YouTube channel before it is too late. All right. So you may learn more, or YouTube search videos about market geometry. That will be very, very useful for you and help you improve your CCI, RSI, and stochastic trading. If you are trading any momentum oscillator, you must combine the momentum oscillator trading with market geometry. Otherwise, you will be trading the CCI or the RSI and the stochastic instead of the price itself. Okay, so we see it now, so it's making sense, okay, what was happening. So we verify that, so good. Now let's check on the third Elliott wave, one step at a time, okay, that's what we are doing here. So it was obvious to us that this has been extended unless you cannot see, otherwise you need glasses, all right. So you can see it's more than 3 times, okay, the length of the first wave. So let's try to apply Fibonacci extension to the first wave. So my first wave, I need to mention something to traders. If I zoom into it, you will see what I'm trying to do here. I'm trying my first wave, I'm counting from here, this candle here, because following our guidelines, okay, but if I do that, there will be another violation. People will say, oh, George, my dear George, the second wave has cancelled the first wave. But the only reason why I want to place my, okay, I'll put it all the way to the bottom here, all right? Then we will say, oh, everybody will be happy, all right? But normally, if I was trading myself, I'll put it here. Okay? For the argument's sake, as they say in London, all right, to avoid too much blah, 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 I'll put it all the way here. Okay, and then I will just sit here. So from the low of the first wave all the way to the top, we want to watch which level? The 161.8%, the 214%, the 314%, and the 314% Fibonacci extension level. If the third area wave goes above the 161.8% Fibonacci extension level of the first wave, it means that there is a high chance that we may see an extension. Breakout traders, this is the best place to trade your breakout. You see here, breaks above, retest, boom. All right. Try to laugh more, all right? Try to laugh more, all right? Have you ever been to London? People laugh all the time. They make jokes, all right? So do that, all right? Okay? So first level we are watching, 161.8% Fibonacci extension level of the first wave. Boom. You see, breaks above, retest. Top down to the middle, boom, 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 boom. As it's going up, you are watching which level? 214% right here. People acknowledge it, yes or no. You see here? This is good for day traders. So as a day traders, all right, you can take advantage of those key levels, all right. So when you have them, the price reaches those levels, quickly switch to the 3-minute time frame and watch it. You can catch some few pips because there will be some reaction, all right. Okay. So it goes up to that point. You go to your 3-minute time frame, all right. Look for bearish chart pattern there. Day trade, contra trade, sell around those zones carefully. Grab your 10 pip, your 30 pip, your 40 pip out, all right, because it's going up. All right, it's going up. But as a day trader, you want to capitalize on those, okay, short-term fluctuation around those key level, the 214% level. So it breaks above it, trying to retest it. Can you see that? Trying to retest it. Boom, next level. 314% level. This is very high, you see, it's quite extended. Went above the 314% level. And here it is, the last one, the 414% Fibonacci extension level. That's where exactly it has stopped. So, do you agree, my friend, that my recommendation is good? 214%, 314%, 414%. By the way, I need to mention to traders that this stock, Baidu, is clear to me looking at the chart, performing this chart analysis, that those who are trading Baidu are professional traders. They are smart technical traders. Because you can see that everything is aligning careful. That's how you know. The way they are trading, everything they are respecting, these are professional area wave traders trading Baidu. They are respecting all the key levels. Okay, this is what we call an orderly market. Okay, and you are likely to make more money in an orderly market. If the market is too volatile, too messy, well, it's time to run away and keep your money in your bank. All right, don't trade. You know, some financial instrument. When you look at them, you do. Some stock are area wave friendly. Technology stock are area wave friendly. All right, I can tell you now. Technology stock are area wave friendly. All right, remember that. So this is what we are seeing here. You see what everything is adding up beautifully. So they breaks above the 314%. Boom, they retest it and then they push it up to 414%, and then they bring it down again. When they were bringing it down, you see here, they bring it down to 314%. Okay, bullish engulfment, it bounced up a bit, 1, 2, 3. They bring it back to 214% level. You see what's going on? So, would you agree with me, putting jokes aside, that those key levels is very important for an area wave trader to combine Fibonacci and area wave? And you want to know which key level, which Fibonacci level the area wave practitioners are using. It's good to know, okay? Personally, I think it's good to know. All right? We can disagree on this, but personally, I think it's good to know. Yeah, so the third area wave has ended exactly at 414% Fibonacci extension level. When you see like this, you know that those are not ordinary traders. All right, let's move on. One step at a time, we have verified the third area wave. Everything is adding up beautifully on the monthly chart and giving me confidence that my wave count is not useless. All right. Okay. All right, we're going to check now the fifth wave. Let's try to put a bit of color into this because, you know, the children like beautiful things. So you want to, if we try to behave like a children to make it more interesting, put a bit of color into it. All right. With all your retina screens or your beautiful screen, you may please your eyes. All right. Okay, now our triangle. I hope you like my jokes, all right? On the fourth wave, I always put in pink, all right? So let's stick to the standards, okay? Fourth Elliott wave, George always put it into pink, and the second wave red, and the fifth wave into red. So from here all the way up here, our fifth wave has been subdivided into 5 mono waves. This is a complex fifth wave, an extended fifth Elliott wave. So now we're going to check whether the fifth wave, also those who are trading this, were using Elliott wave channeling. How do we do that? How do we forecast the end of the fifth Elliott wave using Elliott wave channeling? So what I've done, I've count wave on the yearly chart, then I drop it down to the monthly chart. Then I verify, okay, my monthly wave count on the weekly chart. Some sections that were a bit confusing, not very clear on the weekly chart. Now I proceed to the next step, the relationship between the first wave and the third Elliott wave. Then I use Elliott wave channeling to verify whether my fourth wave is also making sense. Now I'm going to use again the Elliott wave channeling to see whether those who were trading this storm were using also Elliott wave channeling, okay, to pinpoint the end of the fifth Elliott wave. By doing that, I'm trying to verify whether what I'm doing is making sense in the point of view of an Elliott wave practitioner. Most importantly, those Elliott wave practitioners that were trading Baidu, the big search engine in China. Okay, so therefore, how do we forecast the end of the fifth Elliott wave using Elliott wave channeling? Boom, boom. You get it now? Okay, so we'll connect the low of the second wave and the low of the fourth wave. That's the first line here. What? Color into red, boom, and then we draw a line to the high of the third Elliott wave that is parallel to that red line. Is that parallel? And we need to check this carefully, like Lavoisier. Accuracy, all right? Okay, now we will measure, okay, so I'm going to quickly, all right, without wasting too much time, the width of our channel here. Then I'm going to check it whether it's the same thing here. It's not. Therefore, let's try to adjust it. Looks like it, okay. Looks like parallel. Yeah. All right. Good. All right. Thank you. All right, that's it. So those who are trading Baidu, you can see again they use the Elliott wave channeling, and they will be expecting the fifth Elliott wave to end somewhere on the edge of this line here. Will you agree that the fifth Elliott wave has ended on the edge? You can see that as they start first, they see this move, second wave, or first mono wave or the fifth wave, second mono wave or the fifth wave, third mono wave or the fifth wave, hit the channel. But you know what's happening here? Can you see clearly? So the Elliott wave traders were saying so they understand that an impulse wave should not end with all right, 3 waves. So suppose you were day trading and you were here and you were looking for all right trading setup, all right, and you were using the Elliott wave principle. So if you recognize the first wave, second wave, third wave, fourth wave, and you draw your channel as I did now, and then you see 1, 2, 3, you hit the channel like this, what will come through your mind? You'll be saying, it's not finished yet. Why should you say that? Because you know that this is supposed to be the fifth wave. It can end with three waves. So you'll be saying to people that, all right, there's a high chance that it will pull back again and then go up a bit more because it's an impulsive wave. If it stops here like this, the structure of this wave is not an impulse wave. It's free. It can be the fifth Elliott wave. Then as a day trader or swing trader, you will be prepared to expect it to come back a bit, but you will say that it's not going to come up very much, but it has a high chance to push it one more time. And once you see it's completed at it, you will examine the internal wave. You will be positioning yourself here, all right? Okay? And you will be, all right, calling that point, the conversion point, okay? Priority to bullish signal above, as I always do, you put a line there, okay, to control the risk. Priority to bullish signal above, priority to bearish signal below. You receive a sell signal, you take it down like a pro. All right, and then one more time before we go, one step at a time. Anytime you draw the Elliott wave channeling, do not forget what? The median line. Always remember the median line. If you don't want to draw it, just be aware of it. All right. Okay? All right. So where are we now? What's going on? What's going to happen? So I think a lot of traders would like to know. All right. So, by the way, my objective by recording this video is not to tell traders buy Baidu or sell Baidu. It's for educational purposes to teach traders how to count waves one step at a time. The best approach, you learn something, all right, it makes sense, you agree to it, all right. Use a demo account, test it, practice, all right. Practice is good, yeah, practice, all right. Have you ever done Shotokan, all right? Practice, and then you improve your skills before you go and fight in a competition. Same thing in training, you learn something, all right, practice. Pay attention to what has been said, don't miss anything, and then take it one step at a time, give it your time, all right? If it doesn't make sense today, all right, maybe one day it will make sense, or you come back again and use it, all right? It's free. So where are we now? Where are we going? So we have counted 1, 2, 3, 4, 5 waves. So what's going on? So after we see 5 waves, so what we can do is to put a line there. I like those vertical lines, okay? So you say, well, we count 5 waves, everything makes sense, it looks good, or have we missed something? Okay, what's going on now? Is it a correction? It looks to me a correction. Okay, it looks to me, look at this. Correction has begun. It came down a bit. Came down a bit. What's going on here? It became a bit messy. Now look at this. And then it came down again. Alright? So when we see that, what is the pattern coming to our mind? We are thinking of a flat correction. Okay, so we'll say, okay, it's going to go up one more time. And it's going to pull back again. But it's supposed to go up again. Look, it's hanging. What's going on here? What is going on here? Is it the United States, the U.S. election? Is it the U.S. election? What's going on here? You tell me more. All right, you tell me more in the comment section, because normally the flat correction can push it up all the way to the previous high here, or a little bit below, or even at 138.2% Fibonacci extension level, talking about the expanded flat correction. Can push it all the way to 138.2% Fibonacci extension level of the fifth wave in the zone of $306. All right. Will this Baidu one day manages to go up a bit more near this high here, or a little bit below it, or even up to this point before coming down? 1, 2, 3, 4, 5 to which level? We'll use one more time before coming down to the 138.2%. And the 161.8% Fibonacci extension level between the zone of $54, and the $20 zone. Will he do that? Well, maybe, maybe not. But as we say to traders before, for the flat correction, the minimum, the conservative target that one should set is somewhere near the low of the A part of the flat correction. So this is the A part of the flat correction. We are now in the B part of the flat correction. It's becoming a little bit messy here. Supposed to go up a bit more, but it's becoming a bit messy here. What's going on here? So that's the B part. The C part should be following 1, 2, 3, 4, 5 wave down, bringing the price to the zone of $54 and $20. But the conservative target, so for the flat correction, should set it somewhere between $161 and $123. They are that zone. I can stop here. The C part can stop here. Alright, so this is the end of this tutorial, about how to count Elliott wave one step at a time. So each time we recognize a wave, alright, we verify whether we are not violating the Elliott wave principle. If we count the wave on one time frame, we go to another time frame to investigate. We don't leave any stone unturned. We are going one step at a time. We are doing all the verification using Elliott wave channeling, a Fibonacci extension, the internal wave. We are looking at the internal wave as we are counting wave to make sure that our wave count is valid, is thorough, and is making a sense. Alright. So this is it, alright? So do not use one single time frame. You will have to use different time frame. Start with the easiest time frame where you can see it. Or sometimes, if one wave is more visible, for instance, it's easier to recognize the third Elliott wave, highlight it and say this is the third Elliott wave, and then you can go to another time frame, verify the internal wave of that third Elliott wave that was quite obvious, and then take it from there and look at the other piece of the puzzle, so to speak. So if you have finished with the third Elliott wave, you want to ask where is the fourth wave, where is the fifth wave, and then when you say this is the fifth wave, always check the price structure. If it's an impulse wave, it should be subdivided at least into 5 manual waves. Those verifications will help you use the Elliott wave channeling and use the Fibonacci to make sure that you are getting in there and be a multi-talented trader. Use market geometry, all right? Don't combine the Elliott wave theory with all other technical trading strategy. Okay? All right. If you have any question, all right, or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. We are the TSTWSYS008 traders talking about how to count Elliott waves one step at a time. Happy trading to you all and speak to you soon.